All right, the Greater Sacramento real estate market update for September 2023 is here, and we have a lot to cover, so let's just jump right into it. The last meeting, the Fed did increase their short-term interbank rate, so that did go up by a quarter. Everything is expecting that there's probably going to be a pause this month when they meet next week. We'll see how or if that impacts the real estate rates. And as I've said before, mortgage rates and the Fed funds rate are two different things. They can work together or they can work inversely. So we'll see how that impacts things. Overall, inflation has come down. The jobs market is actually remaining a little bit more stable, a little bit stronger than I think they wanted to see. The Fed does want to see a little bit higher unemployment rates. So we'll see what happens, but everybody expects there to be a pause this month. Secondly, my two biggest concerns right now are commercial real estate and the auto industry. So let's talk about commercial real quick. Their rates are usually short-term debt and they're usually adjustable. So there's a lot more, can be a lot more volatility there. And those rates are directly tied to that Fed funds rate. So as that rate's been going up, so have commercial rates. And commercial is basically based on the revenue, or I should say the profit that your commercial real estate creates. So if that revenue goes down or that profit goes down, then the value of the real estate goes down. And when you're paying more for a loan, debt service, that reduces your profit. So we're going to see a pretty tough couple of years for commercial in some sectors over the next couple of years. So keep an eye on that. Let's talk about the autos. Same thing. So auto loans are based on that Fed funds rate. And the auto loan industry just went crazy over the last few years. Lots of money was easy to get. It was getting loaned out all over the place. And we saw these crazy jumps in car prices, right? So as consumers start to tighten up their budget, things have been pretty expensive lately. One of those options may be to sell the vehicle with the higher monthly payment, right? Well, what's going to happen is as we see a lot of those come on the market, supply and demand, that may bring down the value of the vehicles. And if some folks are underwater and they can't actually pay off the vehicle and pay off the loan completely, then they're either going to have to dip into savings to make up the difference, or they're going to go default on those auto loans. So keep a close eye on that. I think we're going to see that market contract quite aggressively over the next couple of years. However, speaking of stability, let's talk about real estate because it's actually pretty stable right now overall. Just a lot less volume is happening. So buyers and sellers are pretty balanced. Things are moving well, just a lot less sales. And depending on the neighborhood in the area, down by about 40 to 50% over what we would normally see in a normal year, which we haven't had for a long time anyway. What is normal in real estate? So let's talk about the Tri-County area. Real quick, homes for sale dropped slightly by 0.5%. A little unusual to see a drop this early in the season, but might be up next month. Who knows? We'll see. Again, 1 month does not make a trend, so just keeping an eye on things and bringing you the updates as I see them. Tri-County area, number of homes sold is up 5.2%. That's good. That shows a lot of demand in the market, especially with the low inventory. Pendings are up by 10.9%. That's pretty strong as well. We did see a correction, so pendings dipped in July. They're back up, which is solid. We'll see these little blips month to month, but overall the trend is strong. Time on market in the Tri-County area is up 12.5%, so it's up to 27 days now. Average list to sale ratio, that is, what does a property sell for versus what was it actually listed for. Homes are selling at 98%. So they're actually down 1%, down to 98% of their list price in the Tri-County area. And remember, that's an average. So some homes will sell way over list price, some will sell way under, but the average, 98%. In the Tri-County area, the median sales price dropped for the first time since December of 2022. So again, we're heading into that fall and winter season. Nothing out of the ordinary. It only dropped by 1.7%, so not a huge number. Again, let's keep an eye on the trends, see what happens. Things appear to be pretty stable overall, and this is a normal trend for this time of year. Months of inventory is up just a little bit, not by much. So anyway, moving on. Placer County. Homes for sale dropped by 4.9%. So a little bit of a pullback here, which is kind of interesting. However, the pendants are up by 6.6%, and the number of homes sold also increased by 2.6%. So a lot of strong demand in Placer County, but we'll see part of that may be reduced homes for sale, reduced supply equals increased demand. Um, in Placer County, the time on market also jumped up by 10%, so it's up to 33 days. So homes are taking a little longer to sell in Placer than in Sacramento, but the list price to sale ratio remains stable month over month at 98%. So that seems to be the going rate in Greater Sacramento region, 98% of list price. Um, the median sold price in Placer County is up 2.4% this month, which is interesting because we saw it peak out, we saw it drop the last 2 months, and now it's back up this month. So we're seeing a little bit more volatility. It's not been an even trend on the median sales price, but that is median. So if there was a really large sale that threw things off, it could be an indicator. Again, we're looking at trends, not the individual month itself. So overall, things appear to be trending in the right direction, just very slowly. So let's see. Inventory is actually down 6% so it's down to 1.6 months in Placer County based on closed sales. That is still solidly in seller market territory. So until we get up to at least 3 months worth of inventory, I think we're going to still see a pretty tight market, limited inventory, and the prime desirable properties are still going to be getting multiple offers and getting all of the attention. So price things right, be realistic with the market. And if you'd like to set up a consultation to talk about your individual scenario, whether you're selling or buying, and you want to know how does that relate to the current market and current pricing, glad to help with that. Just reach out, contact me, and we'll make an appointment. Also, keep following the YouTube. We're going to put lots more information out here. Talk about the real estate market, tips for buyers, tips for sellers, and what to expect. So give us a follow, and thanks again.